GM. GM. Poor ETH, huh? So, today is Wednesday, 3rd of January 2024. What a fucking chart. GM. And let's do daily levels. So, there's the 200-day moving average. So, we are significantly extended above. With the MA inflecting upwards, I want to take a bit of a look back at previous times. We are not as far above it as we were in October, I don't believe. We were 25% above it. And at some other points, we were much further ahead. I think here we were 47% above. Right now, we are 40%. But still, definitely significant. And we will eventually come back towards it. But a lot of people are looking at the market as if it's in this kind of phase, when in reality, it's more like this. And that's based off of a couple of things. One being time, right? Over here and here, we are early in a bull run. Here, we were very, very late. But the main thing for me is price action itself. Bitcoin's price action since October has been very impulsive. The shape and the nature of it is strong moves up and then upwards sloping accumulation, strong move up, and then a bullish consolidation, and then a breakout. That's all bullish action, right? It doesn't mean it can't go down, but it's moving in a completely bullish manner. Compared to this second bounce, just think of what happened, right? Let's focus on the first one, actually, right? So we moved up. Again, it's the exact same as what was happening at 20K. You just have to zoom in. Bitcoin broke out, impulse, upward sloping accumulation, right? Impulse, bit more of that, up into a compression, and then we blasted off. So, doesn't mean that this is happening, doesn't mean that we're going to go to all-time high. Anything's possible, but that's the point is, what's the shape of the price action? What's the nature of it? Is it impulse, correction, impulse? And it clearly is. And that matters because when we then zoom ahead, people who are comparing it to the last ETF approval, you're missing the fact that before that, right? So before October 2021, we had all this. We had the big run up. We had the first sell off. We had a nice second final, really the final impulse, right? So there wasn't an impulse in the market, a proper bullish impulse, since February 2021. When Tesla announced they're buying Bitcoin, then it went into full distribution. A perfect Wyckoff distribution. It broke. China banned crypto, down 50%, lost the 200-day moving average. And then we sort of just grind it back up. The ETF was coming. The rest of the market wasn't done, right? So the rest of the market was bullish, but Bitcoin was kind of just dragged up. You can see that by the rounded out top, the impulsive nature of the sell-offs, right? So the sell-offs are impulsive here. And then because with the ETF hype, Bitcoin managed to drag its way back just to an all-time high, but in a bearish fashion, deviate, away we go, zero. So both time-wise, in terms of the time of, not the cycle, well, yeah, the cycle, not the 4-year cycle, but in terms of the proximity of time, we are at the start, not the end, and the shape and the nature of the price action is that of impulse. And so impulse ends, like here you can have an example, here was an impulsive trend, but it ended very clearly with big exhaustion and a big sell-off, right? So that's when it broke from its last consolidation. It broke from the consolidation there, impulse higher, full retrace. But we're not even close to that. We're only just breaking from our consolidation. So even in that instance, where it's kind of Worst case scenario, you would see price really extend away and then fully retrace in an exhaustion top, and then that's it done. And that's totally possible. I don't think that's going to happen, but it's definitely possible. And I have no doubt with the way we're moving here, and we've left behind this big area and some liquidity down here, as well as the main liquidity there. I've got zero doubt in my mind that we come back to this level. I'm sure we will. However, people are trying to fade this and push towards it at the beginning of a move, when not realizing that what's most likely is that this is leg one of its own 3-leg move, say on lower time frames, where you got leg one, leg two, leg three, and then you come all the way back. Right? That's how those moves would go, more likely. Regardless, I don't really care how it does or how it gets back there. It's more about when, and I don't think the when is for quite a while. And then all the while, the 200 days catching up. So the 200-day moving average is now at 32.2. So our bull market support, which is typically your 200-day, is now above our breakout level. This is just incredibly bullish, however you measure it, right? And we're not going to get China banning crypto again, so I don't expect the 200-day to get lost, because this is not where we are. We're not in mid-2021. We're at the early stage, below all-time high. So you'd be looking at it more like what we did here in maybe in 2020, or one of these moves. And this is the main thing. Like, if you think that we're somewhere breaking out of our bear market range, which we have done, right? Breaking out of the bear market range. Well, look back here. We didn't touch that for 200 day for months. Now, I actually think it's better. It's much healthier if we do go back and test it. But even if it's all sell the news and the next week's bad and we go sideways and down, like, that's going to bring the 200 days going to come like there. That's going to bring us back to the mid 30s. And even if it's peak bearish, we only go to 47 and we drop back 25%. Yeah, makes sense. Maybe we trade within this range here. This old pre-Luna collapse range. Maybe. But I think people are missing. Like, this is like pessimism for me. I don't think this at all. I think people are missing it. I think we go far higher. Far, far, far higher than people think. Because it's the final stage of a parabolic rally on Bitcoin. And people always fade this. People will either take profit too soon. They will not believe that it can even go up. Whatever they'll do some kind of mental gymnastics to talk themselves out of being long this week. The latest thing I saw today was there's a 10% chance that it doesn't get approved in January and that it gets delayed. So first of all, cool. So basically it's the same, right? It's 90% chance of approval, 10% chance of being delayed, not rejected. Some delay that they would have to do about staffing, who knows? Okay. Would I be surprised with that? No. It actually makes sense with a few things, such as the Google laws around or rules around advertising, which don't start till the 29th of January. So I'm sure BlackRock, etc., wouldn't be too upset if it takes another few weeks. But also, I don't think that's going to happen. I think that's just someone asking. Someone is asking Eric, who's one of the Bloomberg guys, and just saying to him, like, is it possible? Or could this happen? Or the SEC are understaffed or some shit like that. Now, how the fuck they can be understaffed or stretched or doing too much work whenever they're literally fucking useless. And the fucking government just prints endless money to fund this shit. But anyway. So yeah, could it happen? Could it be delayed? Sure. But that would just send everything into overdrive on the next dip. That would be insane. A delay is not a rejection. And part of me doesn't even want that. I think the market, for the health of the market, needs to cool off soon and take at least well, actually, we only need a few weeks. We don't need fucking 6 months. If there was a delay, you would see probably a decent unwind of leverage immediately, probably something like that. And then we just go back into accumulation. And then up it goes, right? It wouldn't take that long. I'm sure it wouldn't take the April, whatever. That's what we would see. You'd immediately flush back towards the 38k level, take out all the leverage that chased this last part, and then just slowly grind back up. That would be my expectation if we saw a delay, not a rejection. Delay would just mean that, more time is needed for whatever purposes. I'll see if I can find Eric's post. Must have been where he replied to someone. Either that or he's deleted his tweet. Here we go. Interesting take regarding the politics behind the spot approval. US SEC will approve a spot Bitcoin ETF by January 10 as a political necessity, according to TD Cowen. To us, this is political necessity, as the agency needs to cement its role as a crypto regulator before Congress. Agencies not want to lose a legal challenge to its refusal to approve Bitcoin ETFs. So that's really all it's like. I mean, that's such a non-event, such nothingness. But someone asked, the guy Eric, who's the expert, mostly agree. We used the phrase politically untenable as implication or as an important part of our 90% before it was cool odds calculus. Okay, cool. So literally nothing has changed. And if you see people panicking about this rejection, just understand that it was already factored in with the 90% estimation, which is just all came from these Bloomberg experts on ETFs, right? Why is John McAfee trending? Is it John McAfee? No. I thought John McAfee. Wait. That's brilliant. R.I.P. King. So, look at a little bit of the data here. Bitcoin's looking so good. So anyway, actually, lower time frame. Bitcoin's looking really good even on the 1 hour chart. The EMAs. It's defended this 1 hour trend and is just holding it really nicely. We've now had 2 dips below it. So we had 1, 2, 3, 4 pushes on the low time frames. And when you get such an impulsive move and then 4 pushes on lower time frames, but it barely even retraces back 20% of the leg, that's really strong. There's obviously gaps down here that everyone's got their eyes on, but I just don't think, I think people are missing the fact that we've broken out and we've retested the breakout. And yes, these gaps will fill, but probably later on, right? Unless there's obviously some surprise bad news. But it seems like after reclaiming the 1 hour, then losing it briefly, immediately reclaiming it, once we get back above 45.4, like if we do, I would expect a false breakout, fall back, and then a full breakout, something like that. That would be my guess. Maybe even a false breakout and come back for these stops here. Right? Maybe a false breakout, back down, and away you go. Fucking straight to 100k. Of course, just joking. Data I'll look through quickly here. So the main things yesterday were CVD across the majors, the three different types. Then on trade of the day, I'll do a little altcoin dive. Still think it's Bitcoin season. So open interest ramped up, peaked at the top, which is fine. There was more OI added here than there was anywhere else. But since we've gone sideways, we haven't seen open interest increase. It's just priced down and flat. OI down, basically down and flat. Spot let it up. Spot is sold. Stablecoins let it up. They've sold off slightly less. And coin margin pushed up and sell off. So market pretty much in harmony, pretty much in balance. Funding peaked and spiked on the way up, then a second wave, and it's declining. So funding trending down, meaning that futures are less at a premium, so they're not leading so much. However, I think that if there is a concern, it's the dated futures, which keep adding open interest. And so I've said this: if you understand that funding rates make you have to pay, right? If you've positive funding, longs have to pay shorts. And eventually people realize, oh, you can go to the futures like March, June contracts. You can long these and you don't pay anything. And if price goes up, it still goes up by the same amount. But you do pay. There's no free lunch. You pay a carry. You pay a premium. And it can be arbed by people doing a carry trade, a basis trade, where they buy spot and short the futures. So eventually those people are going to get fucking wrecked. This is always how it goes. So I'm far from being a retarded bull here. In fact, if you've been here, you've known that we've been bullish all year, after being bullish at the end of last year, after being bearish all 2022. So the market has played out exactly as expected over the high time frame. And even though I think we can go a lot higher from here, I don't want anyone to misunderstand that this is still the final leg, in my opinion, of a parabolic trend. So everything breaks, like the funding rates break, the open interest goes wild. All that shit can happen when you're in the final leg of a parabolic trend. But I'm very, very clear here. The reason it's so important to stay bullish and stay long, for me personally, is because the final leg is the biggest, typically. And we could see some kind of massive move, right? But after that, you could see anything. You could see a full retracement of it. Because everything that's building up now is super short term, right? What's happening really from the 1st of January is super short term. So the question is, how high do we go first? But we will go down after. So keep that in mind. All right? And I'll leave it there. I have to travel today. So GM. See you all later on the live stream, 5 p.m. UTC.